I'm tired of credit card products charging up to $100 a month just to show positive payment history on your credit report and potentially raising your credit score. What are you really getting out of it? And is $100 a month worth raising your credit score? See, these credit building products are getting out of hand, charging pretty much anything they want for a monthly subscription, claiming that their product will help raise your credit score. And is a $99 a month credit builder better than a $9.99 a month credit builder? In today's video, we're going to check out one of the less expensive credit building products on the market and see if it's right for you. Stay tuned. What's going on YouTube? Welcome to Currency Counts, where I cover all things money. Look, I don't like any credit building product that you have to pay for. But if you're trying to build or rebuild credit, you're gonna have to pay to play. Because if you have no credit score being new to credit, or if you have a low credit score because you have collections or late payments, it's gonna be very difficult to get approved for any type of traditional credit. So if you need a credit building product, let's take a look at Self and see if it's right for you. So one of the most asked questions I always get, especially when covering a new product, is this product legit? Is it real? Is it a scam? Self Credit is 100% legit. They've been around for years. So let's start by going to their website, and you can find them at self.inc or by clicking the link in my description. Self has 3 products: the Self Credit Builder Loan, the Self Visa Credit Card, and the Rent and Bill Reporting. So let's start with the Rent and Bill Reporting. Point to Self, they offer free rent reporting, but if you want to add bills like cell phone and utilities, it's $6.95 a month. And with the subscription, you can add up to 5 bills reported as a credit line on your credit reports. It's important to note the rental trade line is reported to all 3 credit bureaus: Experian, TransUnion, and Equifax, while the utility trade line is only reported to TransUnion. A feature that I like here is that you can add up to 2 years of past payments for one flat fee of $49.95. And the reason this is so important is because if you have no credit or bad credit and are trying to rebuild, you can make on-time payments going forward. You can buy trade lines, but the one thing you couldn't buy was time. Now you can. And the reason this is important is because credit age and positive payment history is a key part to rebuilding credit and boosting your credit score. So you can now add 2 years of built-in positive payment history to your credit reports. There are a few downsides. One is that you will need a self-subscription in order to add this product. The second is that you will need an active bank account that's at least 2 years old with reported positive payment history. So in the past 2 years, if you've paid bills from different accounts that you're not linking to the Self product, that won't reflect this positive payment history. The only bills that can be reported are from an account linked with Self. So if you've had that account more than 2 years and only use that account to pay bills, great. But if not, you're out of luck. For $6.95, it's worth checking out. But I will tell you this, and I hope this deserves a thumbs up or even a subscription if you're not already subscribed. Experian offers the same bill reporting for free. So you go to Experian, sign up, and I believe it's called Credit Boost, or it might just be called Boost. But you enter all your information, kind of the same way you do here, but it's not $6.95 a month, totally free. So check that out, and don't forget to like and sub. All right, so let's move on to the next product, the Self Credit Builder Loan. And this is where I start asking myself, do I really want to pay for a credit building product? Self offers 4 different tiers of the credit builder loan: small, medium, large, and XL. So the way this loan works is it's basically a secured loan where you're using your own money to back the loan. For example, you have $500 of your own money that's sitting in a savings account at your credit union. You want to take out a loan, but you don't have credit. Your credit union is going to lend you that money, but they're going to secure that $500, your own money, against that loan. So in that time that you have that loan, they're not going to let you take out that money. You don't pay your loan back, they take your $500 or whatever portion of the loan you haven't paid. It's the same principle here, but Self does it a little bit different. So let's take a look at what these loans look like and what you'll actually be paying for. The small credit builder loan is $25 a month for 24 months. I'm not sure if this is just my screen, but this looks crazy. It's real bright. I can't even read it that well. And when you receive your loan, you're not receiving any money up front. You have to pay $25 a month for 24 months. And then at the end of that 24 months, you'll receive $520. There is a $9 admin fee plus interest. Right here, your interest is 14.14. So the total cost of the small credit builder loan is $89. At the end of that 24 months, you're gonna receive $520 back. Medium credit builder loan is $35 a month for 24 months. At the end of the term, you'll get $724 back, and your fee is $125. So total payment here is $840. Large builder, $48 a month for 24 months. End of the loan, you get $992 back. Cost of the loan is $169. Total payments, $1,152. Extra large credit builder, $150 for 24 months. At the end of that 24 months, you'll receive $3,076. And the cost for this loan is $533. So another question I always get asked a lot when covering any credit building product that has any type of tier system is, if I apply for the highest tier, will I receive credit faster or will I receive more credit? And the short answer is no. It doesn't matter if you apply apply for the $25 a month loan. Doesn't matter if you apply for the $150 a month loan. Doesn't matter if you apply for the 99-cent a month loan. It all works the same. Another question I always get asked, they all report to your credit files as on-time payments. Doesn't matter if it's $1 or $10,000. It all reports as on-time payments. If you go to your credit file right now and look at payment history on any of your accounts, you won't see payment amount. But what about the loan amount? It has to be better to have a $3,000 loan reported on my credit report versus a $500 loan. Again, short answer, no. If anything, when this account first hits your credit report, you're gonna take a little ding, meaning your credit score might go down a few points. And this is because you're adding an account with 100% credit usage, meaning you have a new loan with 100% balance on it. You're maxed out on that loan, and that doesn't look good on your credit report. But once you start making payments on that account, your balance will decrease and you'll see your credit score slowly starting to increase. And this is the same principle with the $3,000 loan versus a $50 loan. It doesn't matter. The only time it benefits you to have a high limit is when a new unsecured credit card hits your credit report. So let's say you have two credit cards totaling $1,000. They're both maxed out. You have 100% credit usage. You take out a new credit card for $1,000. It hits your credit report. You have no balance on it. Now your credit usage goes from 100% down to 50%. And remember, credit usage is a big part of your credit score. So it went down 50% right off the bat. Your credit score, you'll see it increase by 10, 15 points day one as soon as it hits your credit report. As time goes on, it might increase even more. That scenario doesn't apply here to this secured loan product. A downside in applying for this self-credit builder loan product is that you're locked in for 24 months. You can cancel at any time by calling the number here. But if you do cancel, yes, you will receive your loan deposit amount, meaning if you paid $100 into the loan, you'll receive that $100 back, but it's going to be minus any fees and interest. So for example, if you paid in $100, your fees and interest is $25. Let's just say you're going to receive $75 back and you just lost out on $25. So again, you're locked in for 24 months. And if you just stop paying without canceling, meaning you default, after 15 days, they're going to add a 5% fee of your monthly payment added to your balance. And payments that are 30 days or more past due, it'll be reported to the credit bureaus as late payments. And that's counteracting what you're trying to do, rebuild or build credit. And if it goes any more past those 30 days, your account will be closed and be reported as defaulted. You will get your loan deposit amount back minus any fees. So at this point, your fees are going to be a lot more than expected, because let's say you paid $200 into that loan. You think you're going to get that $200 back. You won't, because there's going to be late fee on top of late fee. They might even charge you some random fees too, right? So you're not going to get that full $200 back. But even more than not receiving your $200 back, you're going to have a defaulted payment reported to your credit reports. So please, if this is something you don't think you can keep up the payments with, don't do it, because this is to rebuild credit and show positive payment history to your credit reports. A few positive notes to the self-credit builder loan is there's no hard credit pull when applying. It takes 2 years for a hard credit pull to be removed from your credit report. So we always want to keep those hard credit pulls to a minimum, especially when building or rebuilding credit. Another positive to this loan is transparency. There's no hidden fees. You see everything here laid out in bold text, letting you know exactly what you're going to pay. There's no surprise fees as long as you don't default. The self-credit builder loan is reported to all 3 credit bureaus, reporting at the beginning of each month your transaction history from the previous month. So to apply, you need to be at least 18 years old, be a US resident, and have a SSN. You also need a bank account or debit card, but if you don't have those, you can also use a prepaid card. By using a prepaid card, you're adding more fees because you need to load the prepaid card. There might be a monthly subscription for the prepaid card, fees on top of fees. So what I'd recommend is applying for Chime. If you want to help support the channel at the same time, make $100, click the link in my description to sign up for Chime. When you sign up with Chime and set up direct deposit on your new account, you'll receive $100 for doing nothing else but setting up a new bank account. So sign up for Chime, make some money, and help support the channel. All right, so this video's gone on for long enough, so bear with me, we're almost done here. The last product is a self-Visa secured credit card. So in order to qualify for the self-secured Visa, you'll need to have at least $100 paid into your self-credit builder loan. Let me correct that, not just $100, because once you pay $100 in, you're factoring in interest and you're factoring in your admin fee. So you actually need to have a little bit more than $100 paid into your loan. So that means you can't apply for this product right off the bat. You can't have $500 drop drop it down and say, hey, I want this card. No, you have to have the Self Credit Builder loan before you can apply for this. That credit builder loan has to be in good standing. If you have missed or late payments, you might not get approved. And like the credit builder loan, there's no hard credit pull when applying. And you also get your payments reported to the 3 major credit bureaus. So when you have both these products, you're gonna get 2 types of trade lines: your credit card, which is revolving, and your personal loan, which is installment. And this can potentially, depending on your situation, raise your credit score faster. So there's one more product here, and this is gonna be an upsell when applying for any one of these type of credit products. And that's the Self Platinum Protection Identity Theft Insurance. And that's gonna be $5 more a month on top of whatever subscription you apply for. I'd personally stay away from this. This is just another fee added on to whatever you're paying to rebuild credit. So what's my takeaway from all this? Is a Self Credit Builder loan, self-secured visa, bill and rent boost, is it worth it? Is it worth paying these fees? In my personal opinion, no. The lowest tier here, which is a $25 a month, receiving $520 back, paying $89, being locked in for 24 months. There are definitely other credit building products that are a lot cheaper, all right? But on the flip side, there's credit building products that are a lot more expensive. So if you're not subscribed to my channel, consider subscribing because I cover a lot of different credit building products. Self is right in the middle. If you don't want to pay a lot, but you're not sure of where to go for these free accounts or these free credit builders, Self might be right for you. I'll leave a link in the description where you can check them out for yourself. But before you sign up, before you pay a monthly subscription fee, take a look at my channel. I do have other videos showing you free credit building products. And on top of my Chime link, where you can receive $100 just by signing up for a new bank account, I have another link for Capital One. Check that out. You can see if you're pre-approved for a credit card without a hard pull to your credit report. So you can pretty much accomplish the same thing here applying for that Capital One card without paying a monthly subscription. So try that hack first, and if you're not approved, no harm, no foul, because you didn't receive a hard pull to your credit. Now you can go back to Self and start building. So I hope this video helped you out. I hope it answered any questions you might have on the Self account. Thanks for watching. Check you on the next one.